Hey guys, in this video we are gonna talk about money and basic financing when you are planning to study abroad. I kind of did everything on my own, right from applying to universities and coming here and securing my own funds for the master's degree, and I think I'm kind of eligible to answer that. I wanted to take you through the whole process from beginning to end. Let's say right from the actual cost, interest rate, the part-time pay, and what if you don't find a job immediately after graduating. And these are all the questions that are actually asked by quite a number of students during a recent webinar. So let's get started. Where should someone at square one begin? I would say start with calculating the total cost with whatever your budget is. Let's say create a 2 year or a full program cost sheet containing, let's say, two bucket of things that you really need money for. Let's say, for example, the tuition and the mandatory university fees. Please be sure that you go through all the website information, because usually when there is a bill, it doesn't only have the tuition fee, it also has the health insurance, books, and international fee cost and stuff like that. So those are all something non-negotiable. And of course the rent and the utilities are also non-negotiable. I would say other variable cost depends on the transport, the food you eat, the groceries and stuff like that. This should be the bucket one, and bucket two is your visas, biometrics, and service cost if you're going to US, and if there is any deposits that you have to pay for the housing and stuff like that, and also include the initial travel. I would really encourage you to be in contact with the current students or the seniors or the students who are working right now after graduating from that particular university. They kind of give you a lot of information on the fee, the kind of courses that you want to take, and the cost of living in that specific area. So that is very important and it's non-negotiable. And someone asked, how can I fund a master's without completely relying on my parents? This is something very personal to me because I did the same. First, calculate the kind of source that you have. Let it be personal savings or university scholarships or tuition discounts if you're doing a TA or RA-ship, and fellowships and external grants if you're doing some specific projects, and of course the education loan also plays an important role. And see whether you can get any education loan without cosigner or collateral. Yes, it does comes with the downside that could be like change in interest rate than what people usually pay with secured loans, but I think people who are willing to pay your education fee without a collateral or cosigner, they really know the value of your education or what you could do after you graduate. They're not just gonna simply give you money just because you wanted to go and study in abroad. They know the value, or they know what kind of returns you would get after graduating. And also keep in mind that research assistantship or teaching assistantship will not 100% waive your tuition fee except in few universities. There are few universities who waive it, but most of them don't. Even though if you're in a state university, though they will partially waive your tuition fee, I have never seen someone who had 100% fee waiver unless you're doing a PhD stuff. I would say have some realistic plans or strategy. If something fails, you should be able to get back on your feet without any shock. Let's say plan A is your scholarship, assistantship, plus a smaller amount of loan. So it's like good to go. And plan B, what are the next steps you have to take if there are no funding or delays in the process? Make sure you have that in mind. Plan C is if budget is a major deal breaker. Decide if you are open to defer your admission or change the university or the country. and make a list on how to move further if it is out of your budget. It is okay to defer or decline offers that are unaffordable, and also deferring or declining an unaffordable offer is not a failure. It is basically mean that you are having a strategic plan. It is okay to defer because if you are exceeding the limit, it would be very difficult for you to survive there with the living cost and the rent and groceries and stuff like that on top of an expensive tuition. And the next question someone asked was, can a part-time job help repaying the loans? Answer is no. The part-time job will help you for survival. Let's say with the rent, utilities, and groceries and stuff like that. But you should be so sure that you should not compromise your education or the time that you sit to study for the semester exam with a part-time job, because the end of the day, graduating with good GPA and having a good internship experience or any work experience and having a good connection is more important than the part-time job that you are doing. I would say do not stress on the part-time job. My personal opinion is I would rather get an extra loan which covers my living expenses or the fixed living expenses like rent, so that I don't have to worry about that, and I can worry about the internship and I can worry about the semester and stuff like that, because that is more fruitful than this. Someone asked me to explain the education loan process from start to finish. If I were to start again, this is the typical sequence that I would follow. It's estimate the funding gap. How much do I really need to have this education? Check with the lenders if they actually support your university, the specific program, the nationality, and the destination. And don't forget to compare the secured loans with the unsecured loans, like the co-signer requirements and the collateral requirements. And receive a conditional or final offer letter which will help you get your I-20 from your university if you're going to US, because that in turn will help you to secure a visa slot. Discuss about the disbursement according to the university to the lenders. Track the interest rate while studying if possible, because this will help you to stay on track with the cost that is building up while you are still studying. You should definitely talk to them about what kind of disbursement they do. Is it semester wise or is it annual? The next question was, how do I understand interest rate? Someone from a biology background or from medical background, it was kind of difficult for me to do anything from budgeting, financing, and learning about the interest rate. So make sure you know it before you get the loan. You should ask questions like, is the rate fixed or variable? What is the date the interest rate is starting? Is it starting from the disbursement or per year? And on what dates the interest rate is starting? Let's say there are two banks. Bank A transfers the 1 year's tuition fee and living cost to your bank account. They just start adding the interest rate from the next day. Just feels like you are not even going to use the 70% or the 50% of the amount. It's going to sit there in your bank account for like 6 months or something. And there is bank B, which will send the university per semester wise. If they are sending 50% of your bank loan to the university, they will charge you for just that particular amount and not charge you for the rest of the amount. And they would start charging you for the rest of the amount once they disperse it to the university. So these are the two kinds of banks I have witnessed. So make sure which kind you want to, secure a loan from. Check if the quoted figure is a nominal rate or a APR, or they're using any other measurement. This is really crucial and it will help you understand about your own loan. Does the unpaid interest accumulate, or does it get added to the principal? This is also something really important to know when you're getting a loan. Know what will be the estimated total repayment in a normal schedule, normal as in the standard schedule. Like I already mentioned before, there is a tool in Prodigy Finance website where you can totally visualize everything. Like if you change the interest rate and the total amount and the number kind of repayment that you want to do, it will kind of change the number of years that you're paying. Or if let's say if you're gonna finish the repayments in like 3 years, it will show you how much you gotta pay monthly. I'm gonna put a screenshot here so that you can actually visualize it. Also check on the processing fee, the insurance and stuff, because sometimes you gotta pay the processing fee, and some banks they include that in the loan. So these are the two things that you need to check for. And there are some banks who will actually ask you to pay extra if you are doing an early repayment. You should also know that what kind of early repayments you are allowed to do, or do you have to pay extra if you are paying early. So here is a easy way to compare two loans based on same assumptions for both offers, which will help you compare the loan A and loan B. You should also make sure what is your deal breaker and what is something that you can leverage. And the last question for today is, someone asked what was the things that I underestimated or overestimated in money and financing aspects when I initially came here. I know living expenses is a thing, and I really didn't give much importance to it. Dude, it just added up so easily, and I was kind of broke for a few months. You should always have a plan, a safety net or a safety budget, or like a buffer budget if things doesn't turn out the way you wanted. I thought I would get a part-time job after landing in first semester, but I didn't get until mid of second semester. So I was kinda in a financial crisis, but I did saved up some buffer amount, but it was still like cat on a wall situation. I was like, bro, I still have money, but I'm broke kind of situation. So you should have a buffer money, which is very, very, very important. I can't stress enough on that.